Hello everyone, welcome to Ordinary Guy Finance. Make complex finance terms simple. Alright, today let's talk about the best 5 stocks to buy and hold for the next 10 years. Here is the filtering criteria that I've used to select these stocks. Let's go one by one. The first one is the sales growth over last 5 years, greater than 15%, and average ROCE greater than 20%, return on equity greater than 20%, debt to equity ratio less than 0.2, market cap greater than 1,000 crores. If you use these filters, you'll get a lot of companies, but I've selected only 5 out of them based on my further research on quality of the management and the industry prospects, etc. And I've also not included stocks from the technology and the finance sector. That's because I feel like IT service companies generally do not have competitive advantages. So I think you would be better off, investing in an IT focused mutual fund. Similarly, finance is the other way. I mean, you have a lot of good companies, but the only problem is most of them are large cap companies already, which have seen explosive growth. So, for example, Kotak Mahindra or HDFC Bank or Bajaj Finance. These, I think people already know it, so I did not include them. So let's see the 5 companies that I've selected. And just a disclaimer, I've already invested in all 5 of them, and I hold all of them as of now. All right, let's go one by one. All right, the first one is ICICI Lombard. It's as you know, it's a general insurance company. If you look at the numbers, they're really great. Sales growth more than 20%, ROCE more than 20%. ROE more than 20%. Debt to equity is very low at 0.07. Let's look at other advantages and any red flags that I've seen. As you know, insurance market is very under-penetrated in India right now, especially health insurance. So this company is in the next 10 years, it's going to see huge growth. But the only problem that I've seen is it's in a highly competitive environment. So next one, as you know, as most of you know, it's a state-owned company, IRCTC. I generally do not prefer government-owned companies, but this is an exception because it's a monopoly. And look at the numbers, guys. So ROCE greater than 50%, ROE greater than 40%, and debt to equity it's 0. And right now there are high entry barriers because of government regulations. This is both an advantage and disadvantage because let's say if the government decides to change the regulation and allow the private players, then obviously you have to go back and reassess about this company. And another concern that I have is what happens after COVID? Will COVID-19 change people behavior, and would people would people prefer to use personal transportation instead of public transportation? We have to see that in the next 1 year. All right, the third one is Dr. Lal Path Labs. They're in diagnostics business. Right now, it's very unorganized sector, but I think the increased awareness among the patients and then also the increase in the insurance, I think both will benefit the branded laboratories. So this is a good company to look. And the market is expected to grow 25% over the next 5 years. The numbers are great. You see ROCE is greater than 35%, debt to equity is almost 0. But my only concern is the valuation. It's very high at PE of 94. you have to see, if it comes down, once the PE comes down, maybe you have to, get into the stock. Sorry. The next one is Dixon Technologies. It's one of the India's largest electronics manufacturing company. And, if you see right now, the initiatives like Make in India, it will definitely help the company in the next decade. But the red flags are the wafer thin margins, and the valuation is pretty much high at 128. But the numbers are great. Sales growth more than almost close to 30%. ROCE greater than 30%. Debt to equity is manageable. It's 0.15. Right, let's look at the last stock now. Kaplan Point Lab. Kaplan Point Lab is a pharmaceutical company. They're mainly doing business in Latin America and Africa. Both are unregulated markets. But the good thing is they've recently entered into the US market. Their numbers are great. If you look at the sales growth, it's close to 40%. ROCE close to 50%. And its PE is also very reasonable at 16.5. So guys, these are the 5 companies that I think, or 5 stocks that will make money for investors in the next 10 years. But obviously it depends on a lot of factors. So you do your own research, and if you like the company, then only invest. Because after a certain number of years, the company has, if it's pivoted or if it changes its business strategy, then obviously I would sell it. Then you should also do the same thing, right? Thanks for watching. Please subscribe to my channel, and also please provide feedback in the comment section. I'll try to improve. Thank you.